Hi everyone, welcome back to my channel. This is the FX Chieftain, and today's topic will be discussing the multi-time frame structure logic, and also we'll be talking about the liquidity concept. So I know you might be wondering what's the multi-time frame structure logic. If you've been following us on this series of the April's Beginners Forex Mastery program, we have seen where we talked about the breakout structure. We also talked about the change of character, the skeletal structure of price action, using candlestick to create patterns that we'll be able to use to analyze future prices. Well, now we're in the multi-time frame structure. And this multi-time frame, as you can see below or right on the screen, you can see we have the higher time frame, which sets the bias where smart money is headed, while the lower time frame gives us a sniper entry, and this helps us and tells us how and when to get into a trade to be able to make profit. While we have our liquidity concept, who tells us about equal highs and equal lows on the market liquidity pool where stock hunts often occurs, that inducement, what we call false moves, that to trick retailers to get into a trade before it reverses to the true trend. So this is what smart money does. This is how they hunt us retail traders. And this is why I'm here to take us to the next level and to be able to identify all of this so we can be able to, have really good risk management and be able to make money in the forex space. Before I talk way too much, let's get down into the charts. For today's module, I'm going to be using the Euro chart. Okay. All right. This is a Euro dollar. But first of all, before we dive into the chart, I'm going to quickly take us on a run of what I'm talking about when I say higher time frame and lower time frame, a multi-time frame market dynamics and also liquidity. All right. So I'm going to do a swift run because we are working with time. I don't want this video to be too much. So let's use it on a bullish bias. Yeah, bullish bias. What we want to do is mark out the higher swings. And understanding market structure, you want to mark out the high swings and then going to the lower time frame to know how we can align ourselves. In a bullish bias, we already know that market comes from what a level of support, creating what higher highs and higher lows. In this scenario, yeah, based on what we've done so far, we have an understanding that at this zone, at this point, market has done what we call a breakup structure. For those who are watching this video new, if you don't know what this is, please go back to my previous videos on the Start Here playlist. Okay, Start Here playlist. You see all it needs, all the information you need to be able to join us on this trend. Okay, so now let's get back to this. We know that market does a breakout structure at every high, all right, on a bullish bias. At every high, market does a change of a breakout structure. Sorry, pardon me. Market does a breakout structure, something like this. Yeah. And now market has done what? Given us a higher high. What market comes to do is what give us a lower low. And at that high, if market from the higher low breaks out, it becomes what? A bullish break of structure to the upside. And we always expect market to retrace back to at least 50% or 60% of that price leg that was created by the what? Higher low. Yeah. Because now this becomes a range. Let me show you guys. Whenever market breaks a structure, the highest point after it starts to reverse or show significant significant evidence or confluences to reverse, you need to have something that looks like what's a range. You want to take it from the lowest point to the highest point. And whenever price comes into that's a 50%, half of that price level, or the 0.6, 0.7, this is a peep zone, and this is also what we call a discount zone. Yeah, whenever you're bullish, you're looking for discounted prices. Whenever you're bearish, you're looking for premium prices where you can sell at the highest point. While from bullish, you want to buy at the lowest point. So expect price to come at least 50% inside of this zone before you retrace it. So now price is presently here, right? and this is our range. Let's call it our range, yeah. So now we expect price to come to this zone for a buy. But what happens before price comes to this zone? It comes to sell. But what happens after? You want to see it what buy back upright while breaking another structure. While breaking another structure to the upside, right? This is what we're expecting. Good. But now, how do we know this is going to happen? We do not know, right? We do not know what's going to happen. What we're anticipating is that this market is presently here, and at any point in time, it's going to come here to a discounted price level. Let me just mark this out as a discounted price level. Discount price level. This is 10, 12, yeah. Bold text, change the color to red, green. Okay. I think that doesn't increase the text. All right, so I'm going to reduce this. So we know this is a discount zone. Yes, I'm trying to make it accurate. I'm trying to keep to time at the same time. So guys, pardon me. All right, so this is a discount level, discount price level. I hope this color is very, very visible. I just want the visibility in the color. So that's why I'm doing all of this. Okay. All right. So I'm just going to make it restricted. So we know price is going to come here. But now this is our what external swing because this is a higher time frame. Let's call this time frame. Let's call this time frame. So I'll call out 2. Let's call this time frame H4. That's the 4-hour time frame, H4. All right, this is our H4 swing. H4 swing. Let's put it. H4 swing. Price swing. All right. So now, because we're in our H4, you can have this is our higher time frame. Now you need a lower time frame. As a day trader, H4 is good for you to do analysis on. All right. Now for a day trader, you can't do your entries on H4. What you want to look for is you want to go into a lower time frame, like the 15 minutes, the 5 minutes, to be able to analyze the market, to be able to know when there's a shift in structure. Because now, whenever you're bullish on a higher time frame, you want to remain bullish. You don't want to sell when the market is buying. Even if your trades on the lower time frame are telling you to sell, no, do not sell. Wait for there to be a shift that aligns you with the real trend. This is a true trend. Higher time frame is a true trend. I didn't put a level of support. All right, level of support. And this is our true trend. Okay, I want you guys to see this. It's a true trend. This is our true trend. I'm gonna mark this out. True trend, bullish. Our true trend is bullish. Remember I said in a bullish bias. Yeah, so I'm gonna take this to be black. This is our true trend. It is bullish. The trend is bullish. So you don't want to be doing anything outside of this. Now, when it's bullish, you want to go to a lower time frame. Yeah. A lower time frame tells you, okay, oh, this is what the price is doing. It mimics. The lower time frame mimics. This is a higher time frame. Higher time frame. We're gonna put this HF. Higher time frame HTF slash H4 price swing. So that's a higher time frame. Now we're gonna have this as our what? Lower time frame. From a level of support, we're just mimicking the same thing, but in it on the 15 minutes time frame. Now, this is our H4. This is what 15 minutes is going to look like. So pardon me. Let me change the settings for this, then delete it, then restart. From a level of support, the market starts to do a buy. The same, we're mimicking the same thing. We're not changing anything. And when it gets to a level, yeah, what does it do? Changes character. Change of character lecture will be followed up. You know what we're doing right here. Then the market starts to sell. Gets to a point, a discounted point, and what the market do again? It reverses. It changes character to the upside. Aligns itself with the true trend. The true price swing, which is what to buy. Now it has broken structure. It keeps going higher, keeps going higher. At some point, it gets toward an overbought level. And what does the market do? The market sells back down, and now it's selling. Remember, right now, we are on the same zone with this one right here. We are where this is now. Market has shifted structure, and now it's selling back down. But we know this market is coming towards a discount level. Now, I'm going to stop this here. Now, market has what? Right here. Market has broken structure. Remember, this is the same thing with this. We're mimicking this, but this is what on a what time frame, a 15 minutes time frame, lower time frame. So I'm gonna write out the LTF slash what 15 minutes M15 price swing. So this is a replica of what's happening there. Yeah, no difference, no difference. It's just this is on a smaller time frame. This is the price swing. This is our high and a new high right here. Yeah, this is the range in which market is working with. This is the range in which market is working with. And we know at this zone, we are expecting what? At the 50% zone, we're expecting a discounted price level around here. We're expecting this discounted price level around here. Expecting discounted price level. So now, this price level is coming downwards. Yeah? I hope you guys are following. This price level is coming downwards. It's coming downwards. It's coming downwards. Creating what? On the smaller time frame, creating what? Lower highs and lower lows. When it gets to this price level, yeah, what does it do? It changes character again. It realigns. They call this realignment. There's what we call order block or alignment, but now price changes character and realigns itself with the true trend, which is bullish. Because we had an area of interest, which is this discounted level, a level of discount. Now price has realigned itself, which is bullish, which is now an okay place for us to have our entry to buy. Remember I said on a higher time frame, you do not want to what? Sell when the market is bullish. Because now the true trend is what? Bullish. And you've seen the market only come to retest. Imagine you're selling from this zone. You get stopped out when the market reverses with high volume. And now the market tends to what? Go higher, seek higher prices, gets to a point of what? Previous high, which acts as resistance. And now market what? Pushes higher and breaks it. And now we have what? Another break of structure. I'm going to clone this. We have another break of structure. Okay, now this is the 15 minutes trend. Now let's go back and complete the H4 trend. Now H4 has sought what? Remember H4 was here. Now H4 what? Sought lower prices to get to a discount level. And now immediately got there, it starts to what? Fire up. And now H4 is what? Bullish. And because H4 is bullish, we have a what? Break of structure. This is the same as sell, okay? This is the same thing with selling. Whenever the market is selling, even what lower has lower lows, the same thing. You just need to do the inverse, okay? All you need to do is to do the inverse of whatever you've done here, okay? Whatever you've done here, you just need to do the inverse. That's all. So I'm not going to be taking the sell. In another section, I'm going to be taking the sell. What I want us to move into is what we call liquidity concepts. I've done this on a bullish bias. I want you guys to go back and try and practice this on a sell bias. If you're not able to do it, this platform is here for you. Send me an email, send me a text, go to my IG at fxchieftain.com, at IG at fxchieftain. You understand? So reach out to me on my IG platform. Send me a text. I would always be there to attend to you. Like, I swear, get into my WhatsApp channel and, All right. So, guys, so this is it for what? The market structure. Now, let's go to what we call liquidity. What is liquidity? Right? A lot of us should know asking what is liquidity? What is liquidity? Sorry for this. Trying to get my text to liquidity. What is liquidity? What do you know about liquidity? Liquidity is basically support and resistance, and the orders sitting and resting above and below them. So now this is a resistance level. This is a resistance level, and this is what? The support level. All right. So I'm going to change this to red. Okay, good. All right, this is support, this is resistance. Yeah, and we already understand from our topic support and resistance. If you've not studied that, I want you guys to go back to the video and study this. Support and resistance, resistance and support. What is liquidity? Liquidity. These are those orders resting there. At this spot, we have what? Why do I keep picking this two? I don't know. At this point, we have what? Buys. Buy execution. We have buy stops. We also have buy limits. At this point, we also have sell execution. We also have sell stops. Why is okay? Sell stops, and we also have sell limits. Okay, this is it. This is basically it. This is what your support and resistance and your liquidity is telling me. It has your buy, you have your buy, you have your sell. So at this point in time, what the market is presently doing is this. For your buy execution, where are they sitting? Where are they resting? Now your buy execution, remember, whenever you're buying, you buy from a level of what? Support. Whenever you're selling from a level of what? Resistance. You're telling yourself that, okay, I'm going to sell from this zone. Now, where are your buy stops? Your buy stops is sitting just right in the middle, you know? And why your sell limit is resting on another level of resistance that has turned support. This is a topic for another day, but this is basically it. Now, these are your sell stops. Now, these are your sell limits, resting just below a support level, telling yourself that this is how it is using our parts tool. You're telling yourself that this buys, I want to buy from this level of support. Yeah, market retraces, goes through this buy stops. Then at this point in buy limit, market comes back. You should tag me in on a trade, then you should keep buying. That is, this is simply what your buy looks like. And I'm going to change this trend line to green. I'm going to make it a little bit thick. Yeah. So this is what your buy execution looks like. You understand? This is basically what it looks like. Okay, trying to make it as accurate as possible. Now, does your sell look like? Your sell is telling you that yeah, you want to sell this market. Yeah, executed at this point. Yeah, you got your entry here. A market must run through here to tag into your sell stops. And when market comes here to a level of support, turn resistance, what market retraces and what it gives you even lower prices, tags into the trade. This is what you want to sell. This is how you want to sell. So at this point in time, let's tag this as red. The sell as red, the buy as green. So this is simply liquidity. It looks simple, I know, right? Yes, liquidity sounds like a really big word. But liquidity is basically where your buy orders and your sell orders are resting. Understand? This is basically where your buy orders and sell orders are resting. Okay, what I can do is this. I'm going to just write a short note. Liquidity are where orders are resting in form of stop hunts. You understand? So where orders are resting. So what smart money does is like they go there to hunt these prices. Okay, we're just gonna reduce the note to like 20. And where others are resting is smart money goes there to hunt. Smart goes here to hunt. All right. So this is it. Smart money goes here to hunt. This is basically what liquidity is. All right, now let's move to the next phase. You know, we're working with time. I don't want this time to elapse and catch us. All the orders, yeah, all the orders are above, resting above. Now this looks like a range. Now let me use a different tool. Now let's use this curve tool. All the orders resting here, below here, and all the orders resting just above here. Let me shift this a bit. What? They are called liquidity. It's like, looks like it's in a range. This is where your smart money comes in, tag you into a trade, and what rallies the other way. Might come in, taking the sells, push upwards, and go for a buy. Might come in, taking the buys, then push what downwards. That's basically it. All right. Now I said I was going to take us to the chart. Let's go and analyze the chart. Now, this is our chart for what euro dollar on the monthly time frame. First of all, you want to mark out your major structures. For those who want to know, understand market structure and the longest swings, the swings and the structures, what you want to do is this. You want to come over. This is the overall price action that has happened in euro dollar. You want to come over here, mark out what? The highs and the lows. This is it. This is a high, major highs. Right now, you want to mark out a range. You want to know what price is doing. Is it rallying upward? Is it rallying downward? Is it consolidating? Now, what I can see from this with my trained eyes, I can see this price action. This is the highest point of the price action, right? And this is what? The lowest point of the price action. So we can clearly see and say price is in a range. So what you want to do now is just write out range. You want to write out range. Okay. Change this color to black. You want to mark our range. Right here too, you want to write out range. So now you know the market is ranging from this swing high to this swing low, right? This is the major structure in the market. What else you want to spot out? If this truly is a swing high to swing low, we can clearly say this is likely going to be what's a breakout structure to the upside. Yeah? You want to write your BOS breakout structure. And this is your BOS. This is now a swing low, right? A valid swing low. This is now your swing high. But we can see the market came here, liquidated, you know, just ranging of some sort. That at some point, it changed direction to the downside. It has taken out the swing low. Now we can call this a shift in structure or what we call a change of character. You know, but for this reason, I'm going to call it a shift. But bear in mind, a shift is also a change of character. SHIFT, shift. So now I'm saying market has shifted structure to the downside. Understand? But because I'm in a range, I do not know. This range could mean so many things. It could mean this market is going to seek higher prices and break above, or this market is going to what? Seek lower prices and break below. Because the pattern is pointing as what? Now after this shift, market decided to do something like this. Let's look at it. Let's spot this out. Shifted, came lower, gave us a lower price here, gave us a lower high. Now market has shifted from what? Bullish to what? Bearish. Market, this became our new range. Let's call this an inside range. But before we do that, let's mark out our new low. You can see market also broke structure to the downside. I'm going to borrow this, just clone it, and see that what market has done this, a breakout structure to the downside. I need to reduce this to be 2. Reduce this to be 2. Reduce this to be 2. Okay, now let's go closer. Market has what? Broken structure to the downside, right? Now we can clearly say this market is in a downtrend inside of a range. Now, that's given us a low. Now, where is our new range? Market has broken down, market has rallied up, likely looking forward, a premium zone to sell back downwards to continue what the downtrend. But we need to have a high and a low to now say this is our true range. From this dot to this dot, we can say this is what our range. Remember earlier we used something that looks like this, a rectangle, to spot out our range in a breakout. Right? So this zone is where we are going to be trading inside of. But for this reason, not going to be using this. I'm just going to be using a line, and I'm going to mark out that line like this. And what I'm going to call that line, I'm going to call it inside range. Okay? I'm going to clone it and place it just below the newly created low. Yeah? This is our inside range. All right. So I'm going to change this right into 12. I'm going to change this to 12 too. Okay, guys. So basically, this is it. This is your inside range, and this is your inside range. The market is presently inside this range, and you want to know, is this market going to go high? Is it going to go lower? Well, because of this market structure shift to the downside, creating what? Lower highs, lower lows. Now it has created a lower low, and now we know it is inside here, likely looking for where to create a lower high to break this. Our intentions now, we're anticipating that this market is going to what? Sell. And for those of us who are watching this video for market structure to know the higher time frame, this is basically everything you need. The higher time frame is telling us that this market is presently in a range and it is trending downwards and likely to break out. So now the higher time frame is telling us to sell this market. Now we're going to spot out zones like the order blocks. I can spot a very good, juicy, valid order block that has taken out liquidity. Yeah. Now I'm going to mark out that order block right here. I know for those of us who do not understand what order block is, after this video, I'm going to be creating a video order block. So stay tuned to this channel and you want to subscribe, you want to like. So this is an order block. We call it OB/sellers, where sellers are resting. It is a what? A bearish order block where sellers are resting. You understand? An impulsive move after the opposite side of the candle. You understand? This is where institutions, smart money, has placed their orders and has brought out this trade. This is it. And whenever there's an order block, what you want to see is this order block acts at a point of interest, an area of interest, as what? A discounted or a premium price. Now, because we're in a bearish scenario, this is as what? A premium price level of institution buyers that institutions have sold from that zone, and now they are likely to go back to that zone and sell again, sell the price action. Now, let's go down to a smaller time frame like the weekly. Right now, I'm teaching you so many things. I'm doing a top-down analysis inside of a market structure, higher time frame and lower time frame. So you want to stick with me so you can enjoy all of this juicy, juicy content. Now we can see a pattern has been created here. A pattern like what? The head and shoulder pattern. For those of us who do not know, you can go back to my previous videos and watch the head and shoulder pattern. You can see the head and shoulder pattern created here. This is it. This is one. This is another one. This is another one that shows this price level. And at this point in time, we can see at what this shoulder level, there's an order sitting there, and likely this price is attracted to that zone. And maybe, just maybe, from that point is going to what? Sell backwards. Sell back down. Okay. Now, what is this price action doing? Who knows what it's doing? Price is ranging. And I told us that whenever we see a range, that is an accumulation of what? Orders. There's an accumulation of what? Orders. And when there's an accumulation of orders, that's where liquidity is resting. Let's go back to our monthly time frame. Now, on our monthly time frame, we can see that there are weeks resting above and below. Let's go back down to the weekly time frame. We can see something that looks like what? Equal lows and what? relative equal highs resting above and below. What you want to do is mark out these zones. Market has retested here so many times before it broke lower. I'm going to reduce this to 1. I'm going to write liquidity. That's how you spot liquidity in the market, okay? I want to mark out and call it liquidity. I also want to clone this and look for those relative equal highs up there. Remember, whenever you see equal highs and equal lows, they act as what? Entry points for retail traders and for some institutions that are not so big. Why? Because they want to buy at that high point and they want to sell at the high point. They want to buy at the lowest point and want to sell at the highest point. So this is also liquidity. Why? Because this is a relative equal highs. It means people have been what? Selling short this market at some point. At some point. They've been selling short this market at some point, and it's like this. And some people have been buying this market just at this point here, right here. Some people have been buying these markets just at this point here, to this point. So now you see that people are buying and selling, and that's where orders are resting. Yeah, that's why we call them this zone that is ranging liquidity. All right. So now let's go back to our multi-time frame. Then we'll come back to this. We can see from what we drew here, right? If I was to place an order here, short position, if I was to sell this market, you can see that I've been selling this market and all my orders are resting in. And if I was to buy this market, you see that I've been buying this market and all my orders are what? Resting just right here. Which means when smart money comes, they can clear me from either way, up and down. All right, let's go back to our chart, real chart. Now we have a direction and we have an anticipation that market will likely to sell here based on what it has been printing, the institutional footprint and the entire price action from the past. Yeah, and we have spots that market has sought liquidity above and below this range. And now market is seeking liquidity above to where our point of interest. This OB where sellers are resting, you can also call it slash AOI, area of interest, or what? Slash POI, point of interest. Yeah. So now we know this is a valid zone where price is likely to what? Retest and what? Seek the premium prices. Now we can see market is buying. Why is it buying? How are we now going to take this trade? This is a higher time frame. We can't be trading on a weekly time frame as day traders. We move down to what? A daily time frame. Or what? The 4-hour time frame. Yeah, let's use the 4-hour time frame for a reason. Why? Because I used it as an example earlier. Now we see price has taken liquidity above, below this. And when the price took liquidity, what did it do? It reversed. A lot of people would have been stopped out thinking this market is selling. And that's why we had our sell stops by and our sell limits, our sell execution at that zone. Now what? They've been cleared out by smart money with this impulsive move. You saw it on the higher time frame. It was an impulsive move. It did not hold back. But on the smaller time frame, the structures are shifted. What you want to spot now is this. You want to take your highlighter tool and spot shift. This is a low. This is a what? High. Yeah. And where is the most recent low? This is the most recent low, right? And this is a high. This high did not break this high, this structure. So this is where this impulsive move upward is what broke this structure. So you can call this what? A change of character. CHOCH. A change of character or a shift towards in structure. Let's go back to our daily time frame so you can have a clearer view. Now you can see it. Now let's go back to our weekly time frame. So you can see how impulsive that candle was to tell you that this is where it's only smart money institutions that can keep this kind of move in the market. It pushed up, probed that low, that lower low that was here, and now market is in an uptrend. Let's go back down to what? Our 4-hour time frame. Let's go to the daily time frame so we can see. Now you can see the impulsive move has left what? Gaps right here. Gaps are going to come to view. This is what we call inefficiency in the market. Now, we're not going to go to that inefficiency yet. We're still going to do a video on inefficiency. But what we want to spot out is that this is our most recent low, and this is what our most recent high that has now been broken by market. Now that means this is not valid and this too is valid. Now we do not need this anymore. Just need this, this, and this. The market has broken out. Market must come back to fill it up. But no, what did market do? Market kept creating highs, highs and lows. Market came to this spot, created a high. Market came here, created a high, also created a low. What did market do? Market what? Broke structure. Yes. Market broke structure to the upside. Market came up and also broke structure again, created another high, and what? Broke structure. This is an institutional print. What is this market telling you? Let's go back to the daily time frame so we can have less noise and more understanding. Remember, now we are going to the lower time frame to look at what happened for this market to what changed character. If you wanted to get into this buy, because at this point I got into this buy as around March, January, February, I made a lot of money from it. But what I'm trying to tell you guys is this: how did I know this was going to happen? I followed the lower time frame. I waited for a shift in structure, and I was able to watch. Once I identified that, I was able to take advantage of this trade. And now we are bullish. We've been bullish since what? Since January. Since the 14th of January, we've been bullish. We've been bullish, bullish, bullish. And now we know price is coming here because price is seeking the liquidity and stop losses that are up here. The stop losses and others in form of what? Liquidity. Now, price will keep creating this breakout structure, but we should know that the market's true trend is what? A downward movement. True trend is what? A sell. And since the true trend is a sell, we're anticipating that if this market, peradventure in the future, after all of this shenanigans is doing, this market will give us higher lows and come here and watch change character. And this is only possible. This is only possible on what? A lower time frame. What you'll be seeing on the higher time frame is market just came here with a very juicy candle looking like this. And the next in market is what? Selling back down with another juicy candle looking like this. That's what you're going to see on a higher time frame, right? But on a lower time frame, what you're going to see is what? The market footprint. It will be giving you higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Then when it comes here to do a shift in structure, just like it has done here now. So this is what we'll be anticipating in the future. If you follow this trade, you're going to see this happen. The market will get to a point and we have to break out the most recent low. At that point, it has done a what? A realignment. It has realigned itself with what? Sorry, pardon me. That's what it has done, a realignment. It has realigned itself with the true market. So what we're seeing is what? Change of character, or we can call it realignment. R-E-A-L-L. All right, let's put R-E-A-L. Let me use a smaller, yes. R-E-A-L. All right, realignment. It will realign itself, okay? And once it realigns itself, what you'll be looking for is what? Is a pullback into what? A premium level to create what? A lower high. And that is at that point you want to now get into your trade or what? A sell, a short position. And you can do the inverse what? Now you'll be targeting lower highs or even the break of the structure, right? And be having a very, very high risk to reward. So now, but that's not what we're after. This is what it looks like. Understand? This is just the daily time frame. But if you go lower to the 4 hour, you see more stories. Go out to the 1 hour, you see more stories. Go out to the 15 minutes, you see much more stories, much more candles. Exactly. So this is all it is about market structure, the higher time frame, the lower time frame. This is all there is to know about it, and also about liquidity. Okay, guys, this is all there is to know about all of these things. So in the future, on euro dollar, between this time of April to May, we should be expecting market to get to this point and what? Sell downwards. This is all there is to know about this market structure. You need to do the inverse if you're looking for a what? A sell bias, a bearish bias. Remember, the true trend for this market is actually sell. I just did the inverse of what I did here on this dummy trade that I created right here. I just did everything right here on the as a sell pattern. Also, I also explained what liquidity is, and that is what you need to know. Okay, guys, I'm going to stop sharing my screen right now. Um, so if you want more beautiful content like this, if you want more uh, um, understanding about the market, I'm a very good technical analyst. I'm always here to watch to meet those needs. Just I want you guys to text me um, on my Instagram page. Follow my Instagram, like my videos. Also chat me up, text me, ask me, tell me about your worries, what you want to understand. Or you can comment on this and say, this is a topic I want you to watch. Give me more insight or more knowledge about, okay? I'm always here for you guys. Make sure you like and subscribe to this video, my YouTube. Also like and subscribe and follow me on my Instagram page. All right. And also if you want my email is right on my bio. You guys can send me an email, follow me on Instagram. So my phone number is also there. So if you're on WhatsApp, just hit me up. So I'll see you guys later. I mean your FX Chieftain Chinedu Godspower. All right. I'll see you guys later. All right.